Okay, good evening, everybody. Welcome to this evening's ACY Securities webinar, live forex market review. My name is Duncan Cooper. Before we move along, if you could read through the disclaimer. So there we go. Any questions to the chat box or the question box? If you're on a YouTube live stream, I cannot see the chat, but you're more than welcome to watch, or just head over to our webinar page and register your interest and come and join us. All right, so just read through the rest of the disclaimer. All right, let's move along. If you don't know me, my name is Duncan Cooper. I'm a Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time forex trader. I've been mentoring clients for more than 10 years, trading the market for more than 15 years. If you want to contact me, then my email is on screen there, duncan.cooper@acy.com. Just send me an email. As well, through the week, you can get my analysis at our website at the acy.com market news tab, on our YouTube channel, ACY Securities Australia, and you can probably catch most of it as well on my Twitter and LinkedIn if you want to follow and keep up to date. Just head over and link yourselves up. As well, through the week, you can get access to our Telegram channel where I'm providing analysis through the week and usually on Saturday on the weekend. I give you an update of what I think is going to be happening into the new week. So if you'd like to get access to that, just contact Nathan.bray. I'll put his details in the chat in a moment. If you want to get access to my chart layouts and templates, the ones I'm using in the education webinars, with all the tools, and the ones that I'm using in the analysis webinars too, then just contact Nathan. He will set you up. I'll just put his details in the chat. There you go. All right, so let's get into it. Let's have a look at just what news items are coming out maybe for the day. So in the next hour from the UK, we have monetary policy report hearings. The pound dollar has been moving up. It has managed to break above the 121 level where it's been holding for a couple of days. May not be above that level all day, so we can review that. But we do have the monetary policy hearings reports coming out at 7:45 p.m. I don't know if that's going to really affect the market too much, but it is classed as a red item. Then not too much. Tomorrow evening, we do have for the UK 5 p.m. GDP month-on-month prelim GDP QQ, and 11:30 p.m. for Canada unemployment rate figures, and into the morning of Saturday 1 o'clock in the morning for the US, the prelim UOM consumer sentiment. So not sure there's too much that's going to really affect the market drastically. I mean, if this comes out, the US print here comes out significantly different maybe, but unemployment there for Canada will only really affect the dollar Canadian, okay? And yes, this GDP figure could most definitely affect the pound crosses if a significant difference in the number comes out, okay, than expected. So just be aware of what is coming out. But a much lighter week of news this week than last week, with all those central banks doing their interest rate decisions from the Eurozone, the UK, and the US. All right, just going to quickly have a look at next week. We do have CPI data coming out next week from the US, so that is definitely going to restore the fireworks. So that's not until Tuesday. So, but just be aware what's coming out. I always like to know what's coming out 3 or 4 days ahead. Okay, that's what's coming up, and we've got core PPI data as well, even later into the week. All right, let's get to the charts. And we'll first go to the dollar index, and this is my day chart. And I've already drawn on there from last time what I'm maybe expecting could happen. We've hit monthly resistance. We may have a pullback, and now we're going to create a higher bottom to move up and through. All right, so that's what I'm kind of looking at with an expectation. We might not have such a deeper pullback. We may find support before then, before moving up, but we're having some form of correction at the moment after that 3-day strong move up. and that line is this top area here. So if this US dollar revival from last week is going to continue, we really need to see 103.82 broken. If we can't break it, then that revival is probably going to come to an end. All right, so monitor the position of the dollar index to help you with your trading. Okay, we do have a higher top now on the daily, but can we continue and move beyond 103.82? That's the critical line in the sand for that US dollar getting stronger. And the S&P 500, it's still at these weekly tops. There's a weekly top there, there's a weekly top here, and we're just contending with that whole area. It's 79% retracement level of the monthly range. There's your range. Lower top to lower bottom, we could, put in another lower top in the monthly and see a further decline. So there's two monthly highs in here, which are creating weekly tops, all along that 79% level, the 41, 44 level. All right. Moving back below 41.04, which is this monthly low here, would be weak for the dollar index, or the S&P 500 index. So it is just holding to a very slight bullish nature. We did have a very negative day yesterday. I mean, if I had to read the candles here, we've sold off. We had a positive day Tuesday, a negative day Wednesday. We're having another negative day down to form a lower top and break that bottom there. So whilst ever that bottom doesn't break, you still got the chance of moving up. But if we break below that bottom, it's 4086, then we may be getting a turnaround. So, if we continue to see US dollar strength, this is probably going to show stock market weakness. All right. All right, I just want to click through, see what is going on. I might just start with the Aussie dollar, and hang on, I seem to have lost a chart. Got too many charts open, so I want to see what the Aussie yen's doing. Might just start with the Aussie yen and then move forward. So I'm on the 4-hour chart here. Last night I was talking about the head and shoulder pattern, and I was talking about the fact that we have a couple forming, and we have just spiked up to the 4-hour chart right shoulder area once more. So the day chart, potentially this 91 day resistance level here could be left shoulder, head. I know this is a higher bottom, but we could be forming a right shoulder here for a decline down. And with that potential pattern that I'm highlighting, that would be confirming a reversal based on just drawing that fib in, going to the weekly chart, confirming that maybe we are topping out. We've had a weekly downtrend, a rally up to the 62 level, back up to weekly resistance at 92.59. This day chart head and shoulder pattern that's forming could be confirming that topping out process there at the 62 level and the weekly resistance level for a move down. And what I'm also seeing, as I discussed last night, I just tidied that off, is we're starting to see a similar pattern form on the 4-hour. Keep coming up to 62 level here, holding. This could be a little left shoulder, head, and this is your right shoulder potential area here. Yes, this is a higher bottom, I know, but let me correct myself, it's a lower bottom, so that's fine. On the day chart it was a higher bottom, but this is a much more textbook formation in terms of this being a lower bottom here to move up. Now we've had a retest, it's still held once more, so clearly the sellers are sitting just in that right shoulder formation area. So are we going to move down? All right, so you need to work out what your entry could be if you're not already in. All right, you could be maybe waiting for a trend line break here. We had some dollar yen news come out, or I'll say yen news come out. Not entirely sure what it was, but we got this spike down So do we start to see a breakdown through this area to continue the move down with that head and shoulder pattern? Okay. And as Megan can see, you got your hand up. Hello there. Got a question, just type it in. All right, so is the Aussie yen starting to form a head and shoulder pattern there to move down? You just need to decide how you want to trade that pair, and you like to look at the pattern for a downside move. We're going to get a downside move. Let me get rid of that fib. Support's here at 90.51. This is a monthly low. We really need to break that. If we can break 90.51 on a move down, then we could well be traveling down to this area of support down here. Monthly weekly support 97.28, sorry, 87.28 and 87.01. So this could be a start of a reversal to move down to the lower depths of 8,700. Okay. If you want to participate, you have to decide how you want to get in. All right. Aussie dollar. All right. Put out on Telegram yesterday, watch the 70 level for failure. Well, we did fail at the 70 level yesterday. Now, I know this is a higher bottom, but we may have a little bit of like a left shoulder here head. We could well come back up to retest today, 69.84. Of course, we can move higher above that area if it wants to, but we've been failing there twice. So just draw a fib in. And I will be monitoring 69.84 up to the 70 level once more today. All right, with a 79% fib of that move down from its failure yesterday. So I will be watching that 79% level right now. Do you see a trend line break in this area, or do you see your setup, whatever your setup is, to maybe want to short here? What's your trigger to short? All right, if we start to see a reversal back down. At the moment, if you look at structure of price action that was forming on the 50-minute chart yesterday, see how we had a downtrend forming through here, then we came up to a higher top and failed. Well, that's exactly where we're at right now. So that was clearly where the sellers came in yesterday to stop the outward move presenting. All right. So it is in that critical area where the sellers clearly took control yesterday. There's never a guarantee when you trade that your trade setup will work. You just have to manage the risk on the setup. But trading at 79% level, stop above the high, targeting the 0 level is a risk reward of 1 to 3. That's what you want to be doing. Is if you like the setup, can you set up a good risk reward? And that is going to be a good risk reward. So you can monitor a trend line. It's quite aggressive, that one, but we haven't broken a trend line yet. But we're certainly in an area where the market could stop today, put in its intraday high. All right, now there's that potential left shoulder, head, all right, shoulder. So you can monitor that. Euro yen, it really is very ordinary at the moment, the euro yen. Could be from the weekly perspective, because the weekly perspective is in a downtrend. There's a lower top to a lower bottom. This is coming up this week just short of the 62 level. It's holding at weekly resistance here. We could be seeing, whilst price action on the lower time frames isn't nice, we could be seeing that kind of situation happening. So then if you think that is the longer term look of where price is going, then look for an opportunity to get short. Creating a triple top up here with Monday's gap up, but we're obviously coming into some area of day support here, and it's just pausing. When that is a higher top to the last top, we could be forming a higher bottom here. There could be actually an inverted head and shoulder pattern forming here if it wants to form that way. We'll drop down to the 4-hour chart and draw a fib across that range. There's a 79% level where we have been getting support on. So are we moving back up that way? All right. We've obviously had support through this area. And now we're getting support once more here. So this could well move back up to the top of the range. I would much prefer to be a trader up here. My bias from the weekly perspective is down. As I go to the daily and the 4 hour, the perspective looks a bit more upside. But I don't know if I want to really trade to the upside, because the weekly is maybe much more of a stronger bias to the downside. So I will just be waiting for a great level to sell at, and that will be back up here. Will it get back up there? Maybe not. So at the moment, I'm just waiting for something to tell me that I can see a nice setup to sell in line with that weekly possible downtrend that we're going to have a continuation on. I'm not seeing a setup there that I like the look of from a sell side. My bias isn't to the upside at the moment, but if your bias is to the upside, well, we are getting support here, that 79% area of this range. You know, we could be at least moving up to test these resistance levels, and we could move slightly beyond. So you just have to work out what side of the market you want to trade this pair on at the moment. I'm happy to wait for the market to come back up to the higher levels and try just to trade in line with what I'm seeing on the weekly. All right. Euro dollar. So we've had the sell-off. Here's that decline from last week, moving down below a number of old support levels. We move below this weekly top here, 107.36, but we are getting a bounce at the moment. So we're going to be coming back up to levels that we've broken through over the last week. 107.87 is a weekly top over there. We've got daily resistance here at 108.02. So that would be a very logical level to expect some form of resistance. At the moment, though, it's quite a minor area, but this level here should draw it in. There's a low here we've moved through at 107.66. And that level is definitely asking to be resistance at the moment. So you can see the last 2 trading days, the highs have been at or below that level. Today, we're just touching that level. So maybe the sellers are just sitting above there. All right, so we've got a number of lines in here at the moment. I'm going to take that fib off. Yes, price could go higher, and then I'll be watching that fib range. And I highlighted that in yesterday as a possible left shoulder. And price could get all the way back up to this little level and form a right shoulder if it wants to, but we're miles away from there at the moment. So that's what I was discussing yesterday. But today, I've just deleted my line. Let me put it back in. 107.66 is that daily low there. If we can't move above that level, we're going to be going lower. We're not going to see a rally back up the range if we can't move above that low. So, all right. And I'll just get rid of that fib. It's not telling me anything at the moment. So it's coming up to test the highs of the last 2 days here. Still being held though here at 107.66. Just from a logical perspective, this low here at 108.02, which overlaps with the figure, it's very close to last week's low. All right, that would be a much more logical number of the market, 108.100, where to expect, you know, maybe the market to rally to and find selling resistance. But at the moment, price is holding at 107.66. So through the day, you know, so we just tagged it on the last candle. That's the high to the left here on Tuesday when Jerome Powell was doing his speech, 3 o'clock in the morning. That's where price, you know, severely moved up to and then severely sold off. So that's where the market got capped on the Powell speech. So obviously we've just traded a couple of pips above there, but of course the market's watching that high. So getting a tight entry up here could offer you a very good risk reward to trade down. Of course, it looks very much like the market is definitely watching 107.66, that old day support level, which held the market when Powell talked. Is it going to hold the market today? All right, so you can monitor the area for a reversal. Maybe we can't move above 107.66. If we do, that 108.02 daily resistance level will be the next level to watch. You know, we're looking for some area at the moment. Significant sell-off last week. We're looking for some area for maybe a lower top to form. Could just form by holding at that low point there. All right, so you can work out what you want to do. Pound yen, it's rather range bound. It is starting to very much respect as a resistance point this low here through this week. So we are moving up today. We may well get up to 159.50. That's a level to watch, to expect selling pressure for a move down. If it holds a move down, you'll be looking in an ideal world for a move back down to 156.07, which is no monthly top to the left, or 155.59 weekly support. So like the euro yen, this is not the most perfect pair at the moment. It's very range bound. You're going to find maybe an opportunity somewhere better, but if you start to break it down on a lower time frame and you see a move back up to this level, I can already see without drawing a fib in that moving up to that level would be a 79% retracement of this range. So there's something going on there for sure, that if the market came up to there and then you saw a 15-minute chart reversal, that could be a good level to trade down from. But I won't be trading that. I'm just looking at another pair that's price action is looking a lot tidier, a lot nicer. And it's not been in a long-term range, okay? But if you like the pound yen, watch up here, 159.44, sorry, 159.41 up to 159.50 would be your resistance level for maybe a move up. You know, it's not nowhere near perfect, but that could be a left shoulder head, kind of right shoulder here, for then a move down to support. Right, pound dollar. Now, I did put in the Telegram today to watch this area up to the 120-100 level. It did hold there for a while, but then something's driven it beyond yesterday's high. So if you were getting in at the figure, then maybe you got stopped out, but that's trading. You're going to get stopped out from time to time. I would still be watching, though, the 120-100 level whilst we're above at the moment. This very impulsive candle here could have been stops going off above this high. And we may well see, you know, I will be definitely monitoring that high of yesterday, 2109. If we start to move below 2109, that impulsive move there just stops getting triggered. So then we could be moving back below 2109, back below 2100 for a move down. So let's just have a look at the day chart perspective. So we are moving back up. Last lower tops up here. If we're going to have a significant move up, then you want to be monitoring the fib. And Slav, as the FTSE taking out the high at the moment, gone above that all-time high. So that could be giving a little bit of a bullish nature at the moment to the pound. But when you're looking at the pound dollar and daily here, yes, we're above the 121 level at the moment, but there's this daily chart top here, 121.26, we're at 121.27. There's a low here. There's another high here. It's an area where the market's been forming support and resistance over the last couple of months. So I would be just, you know, waiting to see if we just move back below 121 today. Of course, we could be moving a lot higher and retracing where we came from. So there's a low up here at 122.63. So that's broken day support, could be resistance. Just fractionally above the 62% level. All right, there's a bit of an imbalance here that maybe the market wants to fill today. And it may want to come back up to, you know, that's where the sellers were on Friday. We were below that level, it held, and then we moved down. So price could come back up to 122.63. 62 level up to the area there could be where the market wants to head to. All right. But as I say, if it can't really hold yesterday's high and it can't hold 120-100, maybe that was the stops going off ahead of that news item coming out in about 15 minutes. Then you may start to see during the day a sell-off back down. All right. We've almost got to the start of that imbalance. So it's always better to be, if you're just looking at this and saying, where would I prefer to sell? Well, it is up here. Okay. But the market has been over the last 2 days holding at 120-100. So if we do see more weakness back below 120-100, that's the level to watch. But this would be obviously the more desired level to sell at if price got there, but price might not get there. So you could be waiting for that level and it never comes around. So 2 levels to watch, 120-100. Do we start to fail there today? Or do we come up to 122.63? Or hold at the 62 level at 122.33, that area there, okay? Nothing's, back to the day chart just for a moment. Nothing's really telling you here that the day chart trend, which is turned to down, is changing back to up. It's just correcting. The market always corrects. It moves with the trend, then it corrects, moves with the trend, then it corrects. All right, so we're just having a correction there of the movement down last week. So it's just monitoring where you can see a nice setup to trade down from, as you maybe see the price actually starting to reverse. All right, New Zealand yen. Well, those are my annotations from Tuesday. The market hasn't done too much from the middle of the range. I'm still looking for the market to be at the top of the range or the bottom of the range to trade back the opposite way. And where it is at the moment is very uninviting. All right. So my daily resistance up here is at 84.66, up to the next level at 84.98. And I've got a daily support down here, 81.03. And we're pretty much smack bang. That highest levels there is 85. That's 81. The midpoint's 83, and we're at 83.24. So very uninviting when it's sitting right in the middle of your potential range. And that's a minor level. I can take that off. Let's look at the outskirts of where the market's been respecting and look to trade up or down from the outskirts if we can get to an outskirt. It's always worth knowing where the outskirts are. Might take a week to get to those outskirts, another week. But then if you just disregard the pair and then price gets to the outskirts and you're not watching, and then it presents a great trading opportunity, miss it, you're going to kick yourself. So whilst it's not presenting anything today, watch the outskirts every day. All right, New Zealand dollar, much like the Aussie dollar, the pound dollar, and the euro dollar, it's having its little bit of a corrective upward tick at the moment from the decline of last week. And very similar to euro dollar, pound dollar, there's a lower level of support that we've moved below here that we could be holding at. That is at 63.65. Now, it's always great when we get a higher rally up to the 62.79% level, but maybe we won't get one of those. The more logical level would be up here at 64.12. That's 64.12 level. So that moved down last week. The 64.12 level will line up nicely. Well, it's getting more closer to the 62 level than where price is right now. So that would be more attractive to be looking at that level up to the 62 level at 64.35. So 64.12 up to 64.35 would be a more attractive area to look for a sell, but can price get there? That's the question at the moment. Starting, we couldn't get there yesterday or the day before, and today we're just tagging that level right now and not wanting to move above it. So maybe we can't, if these rallies that we're seeing on the pairs to the US dollar can't get up to their 62 levels, which are quite a distance away, and then start to reverse and move down, all that's really telling you is that the market's just weak. It doesn't have the buying pressure to get up there. All right, the sellers are taking control way ahead of where you would normally expect price to move back up to the 62 level or the 79% level. So if they do hold at these lower levels of broken supports, that's just weak. And that's potentially telling you that the US dollar strength is going to prevail, and maybe we're going to see another quite significant leg down when we start to move back down again. All right. So last candle has been quite aggressive, so you could be monitoring a trend line break, which I think we've already just had. All right, had a bit of a trend line break there. At that resistance level, you need to work out, do you like that level to trade down from? There's that Powell high from Tuesday. We're not wanting to hold too long above that level before we're getting selling pressure coming in. Right, so you can monitor if you like that level to trade down from, or you're just waiting for a higher level. Dollar Canadian. It's not easy at the moment. It has found support ahead of weekly support over here. To the weekly chart, as I've been saying over the last month or two, we have a higher bottom or we have a lower top, so it's mixed, but this is maybe a higher bottom on the weekly forming, but it's come up to daily resistance at 134.71 across here. So it's very range bound, but I suspect that this may be moving up this way, but it's obviously having a nice setup to be able to initiate a position. You know, a nicer setup would be to see like a 62% retracement or a 79% retracement, but it's not offering that at the moment. It's getting some support in the middle of that range, and it doesn't look that attractive right at the moment. So we've got the job figures tomorrow coming out for Canada, so it's unlikely to go too much until the job figures come out, and then you might not have a setup to try to trade because of the job figures. So if I was wanting to trade this pair, I would be monitoring overall a pullback to the 62 level or the 79% level. That would be more favorable because of this area of support here that got formed. All right, so monitor those two levels. Might not get down there. It may just go sideways for the next 24 hours as it waits for the dollar to come out. So it's not the most friendly looking price action at the moment to try to trade. Dollar yen, it isn't being that friendly. I put in the Telegram today, look at the central pivot point and 131.11. It did get some support there for a bit, but it has obviously moved below. And yesterday, today chart, this weekly, what was resistance for many trading days through here, we've moved above, and yesterday we got a fraction short. So we may see today a move down to that level or close to that level. We got close to that level over the last two trading days, but we haven't quite been down there. So, you know, we have potentially, you know, moved up to a higher top here. We've had a day up today, so whilst it's negative at the moment for the day, we are potentially forming a higher bottom here, just ahead of that 130.40 support level from the weekly low. And on the 4-hour chart, it is a higher bottom to a higher top. And, you know, if you're wanting to buy this pair, this is probably a 79% retracement just there. There we go. It's had 2 stabs at that level today. All this support here is coming from this, what was 4-hour resistance tops here. So it is on support. Buyers and sellers are fighting. That's why, you know, it's moved up through Asia for a while, and now it's getting pulled down because it's buyers and sellers are fighting for the direction to start to, you know, are we getting a longer term change to the upside, or are we going to have buyers and sellers fighting out for a while, making price action rather difficult? All right, so, you know, this, well, whatever Bank of Japan news got released earlier, there's a bit of a headline came out on Forex Factory, something to do with one of the decision-making people in the bodge, or a change of person within the bodge, sent this spiking down. but 79% level is holding here. So if you like the idea that the day chart trend is turning up, then you might see another revisit of the 79% level. That's the 79% pattern that you could be trading to the upside. Stop below this low down here, trading at the 130.85 level with the anticipation that this area is going to hold for a move up beyond 132, up towards that 127 extension. Okay, now you can be monitoring the 15-minute chart for a trend line break to the upside, which we haven't had yet. Or you could just be simply looking to be a buy down here at the 79 level, stop below the low, trading the 79% pattern. Okay. So over the course of last week into this week, this is the first pair that's starting to develop its trend in terms of it has a higher top, it now has a higher bottom potentially forming to that. I know it's pulling back intraday, but it has already kind of formed a higher bottom at the moment. Of course, it can break its higher bottom and we get a false trend confirmation, but it is the first pair versus the US dollar to start to show its changing trend in terms of higher top, higher bottom. On the other pairs to the US dollar, we're not seeing yet a lower bottom, lower top. I don't think on any of the pairs yet. We're still having their rallies. Olif May saying, was there any news from the bunch today? There was something that came out. Well, I can't quite remember what it was. If you go to Forex Factory, I saw something in here. Japan's LDP is said to be divided if Kishida seeks a bodge pivot. So I mean, a change of stance. Not entirely sure what that change of stance is, but the fact that the market went down would mean that that would be hawkish in terms of policy change towards a stronger Japanese yen, tightening of policy. All right, so that's what I saw. And that's what created a spike down. All right. And it hasn't followed through below the spike. So maybe down here is the, this, as I was saying last night with the head and shoulder pattern and trading at the 79% level, this offers great risk reward to the upside here. Of course, you need to make a decision as to whether you want to be a trader down here, but potentially just trading up to the high here from the 79 level gives you a risk reward of 1 to 3. And from a day chart perspective, if we do find support here today to move up, we could be, higher top. If this is a higher bottom here, we could be moving up long term. I did a video today saying we could be moving up to 133.62 as this uptrend develops. That's an old weekly low, but we could be moving all the way back up there. So getting long down here with limited risk, with massive potential risk to reward potential, you just have to work out, do you like the look of what is going on at the moment? I mean, it offers great risk to reward. Can you see a setup down in this area that you like the look of to make you want to take a buy down here? All right. So a potential 79% pattern forming there. We can review that next week to see whether it holds and moves up. But at the 79% level, you only need to risk. You don't need to risk more than 30 to 35 pips there for a massive potential risk reward. Okay. All right. So obviously make your own personal decision. All right. Let's have a look at gold. It's looking very similar to the likes of the euro dollar, pound dollar. It's had that sell off. We're into maybe the fourth at the moment. We're into the fourth positive day, but those days are very small, aren't they? We're not having a massive reclaim. And I'm looking left. I'm on the day chart here. There's a weekly top here and a low here and a top there. This low here, 1890.07. Looks like the market may be watching that level, 1890.07. Looks like the market may be well watching that area there. All right. See this area here, consolidation, consolidation before it went boom. And yes, it's consolidating here at the moment, but I don't know if this is going to go boom. It may just hold here. All right. In a perfect scenario, you know, on the day chart here, we've had a very strong sell-off. It would be great if we got a really nice rally back up. 62 level overlaps with your 1920 monthly resistance level. That would be the perfect level to see the rally complete, but it might not want to get, may not move below, sorry, may not move above that level because for 4 days it can't really get too high. But that would be the perfect level to watch for a reversal down. But we may just be holding here 1890 up to the 19 level, the 1900 level. All right, there's no commitment. As it gets close to the 1900 level at the moment, there's no commitment. All these highs here. All right, so you can monitor that. Just monitor, do we start to see a reversal in this area? But we know this would be my preferred level up there. Just technically because it's a 62 level, and it will reclaim some of this imbalance here. There's always the question in your head that after a large drop, the imbalance needs to be filled. So why would I be trading here to get short when potentially, you know, this imbalance here needs filling? So that's the better technical level, but we may just be forming some form of a little upward channel here at the moment, little flag before I drop below the flag. Okay, so you can monitor that. All right, so theme tonight is, you know, pairs to the US dollar in a little bit of rally mode. Some of those yen pairs don't look great at all, especially the euro yen and the pound yen. All right, just have a quick review. Aussie yen is a little bit weaker now to the downside. Aussie dollar definitely had a trend line break from up there at 79. If you like this area and you haven't gotten in yet, this may just come back up very close to that level, and you could click in, stop above the high. Euro dollar did not like it up there, did it? You could watch for price action to form here. Does it give you a reversal signal that you like the look of to trade down? Pound dollar still holding. In 1 minute's time, we're going to have the news come out. So we'll just keep this on screen and we'll see what the news does. So look, we're 50 seconds away from the release. It's quite strange how the pound is very bullish at the moment relative to some of the other pairs to the US dollar when it was very weak last week. Slav, I know you said the FTSE's moved above its, I got the FTSE open somewhere. The FTSE's been heading up. All right, so it's moving above, at the moment, it's all-time high there. So let's just go back to the pound dollar. And with the, what figures are coming out tomorrow? With the, that's next week. With tomorrow's GDP figures coming out as well, the market may be covering some of its short positions ahead of that data release as well. So we may go a little bit higher on the pound who wants to. All right, so we're just having the monetary policy report hearings released to the market, and the market's doing nothing. No real reaction at the moment. I don't know how big a document it is. Maybe people are having to sift through it first of all to find something that may be of relevance. No, but no major reaction there. All right. So again, you know, I'll just be looking to see if we can move back below yesterday's high here, back below 120,100. 120,100 over the next 24 to 48 hours could be a focal level to be a seller at if we of seeing a false break today. You know, this area here, let me just move to a 4-hour chart. Yesterday's lesson on the head and shoulder pattern. Okay. Now this little area here, which is around the 120-100 level. If we hold here today, over the next 2 trading days or so, we could move down. Into next week, we could see another revisit back up to that area, and we could see a head and shoulder pattern forming. So question is at the moment, how much of a further move up are we going to see of a correction from last week's drop? All right, so I was watching the 120-100 level, but I was waiting to see if price wanted to fail. And, you know, I never actually initiated a trade. You know, I was waiting. I could see that pull back to there, but I saw that hold on that 120.88 day support level. So I wanted to see some kind of holding here and failure, and it hasn't really happened for me at the moment. I would like it to be a much tighter affair as well. So if price can move back below 121.09, so let's say it does move down. Retest intraday, wants to start to turn over. Can I get a nice tight entry? All right, I didn't really see, I know it was in the price area, but I didn't see price starting to really formulate how I wanted maybe to initiate a trade. We're seeing a bit of pressure there at the moment on the candle, following the news. Are we going to see a decline down from that level? So you can monitor. You know, I spend my life monitoring. I don't spend my life trading. I'm looking at levels, waiting for price to set up. Does it start to set up nicely or not? Okay. All right, so any final questions? Monitor that pound, see whether we start to fail at yesterday's high. Over the next couple of trading days, we might see a head and shoulder pattern forming there or not. We just have to wait and see. So Cameron is saying there's a trend line break. Well, there was a trend line break here, but this candle here is trading into this support or resistance line. All right, so whilst there's a trend line break there, you have to ask yourself, I'm trading into support there, so do I want to trade there? Now, you may have said, yes, I do, but if you did, then of course you're wrong at the moment. All right. If I'm looking at the swing points, that's still higher top, higher bottom to a further higher bottom as well. All right, so when I was looking at that, I wasn't seeing price telling me a strong enough story that I wanted to get short there at the time. See price action over here yesterday when we came up to the figure. So we see how we came up, higher top, back below the figure, higher bottom. Then we formed a lower top here. And then we broke below this swing point low here. So then that would be, you know, a trigger for an opportunity to sell on the break of that swing point low. And it traded down, wasn't the biggest trade down in the world, because where it stopped at was this area here. When price action came down to fill a bit of a kind of imbalance in here. All right, so you have to ask yourself, where's price trading into? And today we did trade into, we moved above 120.88 daily resistance, and it became support here. Didn't see a swing point change on the chart. Or even at the moment with this price action just here, the swing point trend there on the 50-minute chart is still up. All right, so whereas over here, when you got a swing point change to the downside here, there was a movement down to show some profit. Not the biggest profit in the world, but at least the swing point trend change there to initiate that move down. All right, so as I just monitor the pound, there's yesterday's high, 121.09. Not doing too much at the moment. And just want to refresh my memory. There's not too much news coming out for the rest of the day at the moment. We're into Thursday, aren't we? So here we go. We do have the unemployment claims, but it's not a red calendar event, but that might stir the market depending on what comes out. The market might react to that enough just to maybe create buying or selling pressure, enough to start to see the pound dollar start to move down or not. All right, so at the moment I'm just watching some levels and I'm not seeing anything to initiate right now. Could just hop back to the Aussie dollar because that, out of all the pairs at the moment, this is failing at where we failed at yesterday. All right, 70 level yesterday, we got a fraction short. Failed at the high when Powell was speaking on Tuesday, sold off. And the area that I highlighted there, we couldn't get to the air, we couldn't move above the area where we tried to move into yesterday before selling off. So that area up there looks a very nice level to be a seller at. Stop above the high and move back down. And let's just have a look at the New Zealand dollar in tandem. In tandem, there's that daily level I discussed on the New Zealand dollar. At the moment, we're seeing a little bit of weakness there as well. Aussie dollar, New Zealand dollar, highly correlated. Both are showing a little bit of weakness at the tops of their days at the moment, where they're challenging resistance levels. There's the Powell speech high from the other day. All right, so if both of these pairs are not wanting to hold above these highs through the day, then we could well see a movement back down the range. All right. All right, everybody, I'm going to call it a day there unless there's any more questions coming in. Give you a heads up for next week. My webinar page here. So next Tuesday, more live market analysis. Next Wednesday, going to go through the 79% fib retracement pattern. Touched on that today. And then Thursday, more live market analysis. So big question at the moment is this little bit of a rally we're having from moving back up from last week's obviously very strong decline. How much of a rally are we going to get? And are we going to see, into next week? Are we going to see a further follow through into next week? We've got obviously the US CPI data coming out next week. Market may well be starting to maybe have a little bit of pause for the next big data event, right? Because that's definitely the next big data event. That CPI data comes out and starts to uptick, well, that downtrend is going to further follow through for sure. All right, so just be aware of what is coming out next week. US CPI data for sure is going to affect the market. All right. Other than that, have a great weekend. If you're having some nice weather, enjoy it. I'm having some nice weather here on the Gold Coast on the weekend, so I'm going to enjoy that. All right, so make the most of the summer if you're in Australia, wherever you are. And if you're in the likes of the UK, well, you're in the middle of winter at the moment. So I'm guessing you're not getting too much sun there. But in Australia at the moment, we're having a very nice summer, so make the most of it. I'll leave from me to you. Have a nice weekend. Have a nice weekend, everybody.